The Rebel Capitalist Show.
So let's move to China. And we were kind of
Yeah.
talking about the dollar, and I think that what's going on in China from a macro standpoint could actually impact the dollar, the DXY. But what is your view with what's going on with Evergrande, Fantasia? I did a story, I think, yesterday on another real estate entity there that is defaulting on their payments. I'm not sure if they're defaulting on dollar denominated debt or yuan denominated, but what's your view of China right now?
Well, China is really struggling right now. I think that's pretty clear if you look at the market developments. I almost find it amusing that we've seen a 12% drawdown in property developers this week without too many people talking about it, which to me is a sign that no one knows what's going on in
And
China.
look at their debt too. Their junk debt is yielding like 21% right now.
Yeah. So we've seen crazy market developments in China this week, and frankly, no one is talking about it in the West. Which is a big puzzle to me. But I basically think that the reason is that no one is getting any info out of China right now. And those who knows what's going on, they are not allowed to speak up. So it's a really tricky scenario to grasp this one. But I'm getting scared of it. I have to admit that.
What metrics do you use to try to determine what's really going on there? I mean, I'm obviously not a professional, so the first thing I would do is maybe try to look at the exports. I'd try to look at the imports to see if they were importing the same amount. What do you use?
Well, the export-import numbers are basically the most true numbers that we have from China, because we can basically correct them ourselves, right? So in that sense, it's probably the best to look at. But otherwise, I track the air pollution over Beijing, because that's also one way of looking at it, which is very, very difficult to manipulate. So we've seen over the past 3 to 4 months, very, very, very low pollution over Beijing, which to me is a sign that the activity is low, because otherwise the pollution would have gone up.
Right.
So there are signs that they're actually struggling to produce the same amount of goods that they've usually produced. So I guess when we actually get the numbers out of China that we can be certain of the validity of, then we will have it will basically be a testimony of a complete slowdown in China. Maybe not a recession, but a very, very marked slowdown.
Why do you think Xi Jinping is allowing that to happen? Why do you think he's not stepping in, assuming that he's not?
Well, this is him trying to regain control of a economy going wild. If you look at the developments in the real estate sector in China over the past 5-7 years, then we've seen material yearly increases in the price levels. If you look at the affordability of real estate in Beijing, for example, then the price is like 20 times disposable income, right? 20 times income. While if you look at the average price of a home in the US or in Europe, if you really find the most expensive spots, then we are probably running at 10-15 times income, right? So China is the worst country in the world to buy real estate if you are a regular Joe. And that's essentially an issue for Xi Jinping down the road if regular people, they start debating whether he's the right man, right? So I think he's starting to look very defensive in a way, and he's starting to break down all kinds of sectors to try and regain control of the economy.
So regain, and then hopefully, they might go through a slowdown, but they're trying to kind of land it soft instead of having a really hard landing. You had a hard landing in a country with, let's say, 1.5 billion people. From a standpoint of social unrest, that's a lot different than a country of how many are in Denmark, or even the United States, a country with 350 million. That's one thing that Americans just really don't realize, that the political dynamics there are very, very different.
Yeah, We are only 5 million here, so I wouldn't argue that we have a lot of influence on the global economy. But I mean, in terms of China, we already know that the slowdown is there, and it will have repercussions for right about every part of the world into next year. We've seen how China has been leading the global cycle over the past 10 years to a larger and larger extent.
Yeah.
And I basically think the same will happen next year. We will see a slowdown everywhere
Yeah.
as a consequence of what's going on in China right now.
I was trying to think of how that may impact the dollar the other day. And let me tell you kind of my ideas, and you can say, George, that's ridiculous, or yeah, you might be onto something there. I read a study that showed they import about $2 trillion worth of stuff per year, import. And I thought, okay, well, if they go through a recession, and let's just say that they're importing half as much, that may be too much, but just as a thought experiment. So their imports go down to 1 trillion. We know that a lot of those imports are actually settled in dollars. I don't know if that's 50%, 60%. I know globally, usually, about 60%. So assuming that $600 billion of those imports that they used to have were settled in dollars, that means that there's 600 billion less dollars going out of China into the global economy. And then I think, okay, well, that's just basically dollar denominated cash flow for a lot of these corporations. And a lot of these corporations have a lot of dollar denominated debt. So that debt payment every single month doesn't change, just like a household, but yet their dollar cash flow is decreasing significantly. And therefore, it makes it harder to pay that debt, to service the debt. Therefore, they end up either having to take their local currency cash flow, go into the FX market, and then trade that for dollars, which would increase the demand for dollars, increase the supply of, let's say, the Colombian peso. Or they just have to sell some of their dollar denominated assets. And this creates this kind of dynamic that could increase the demand for dollars outside of the United States and outside of China on the global market. Do you think there's something to that, or is that just an insignificant cross current?
No, I think you are leaning in the right direction. I also bet that the dollar will gain versus the Chinese yuan over the next year. The reason being that global trade is essentially the key source of dollar liquidity for foreigners. So when global trade drops, exactly as you describe it here, then we tend to see a stronger dollar. So have a look at that in a historical perspective. If you look at the monthly volumes of traded goods versus the DXY index, for example, then there is a very, very strong correlation due to the exact mechanics that you described here. So I think that's essentially the reason why you should expect the dollar to gain versus Chinese yuan.
Let's look at the opposite side of the equation. If we are to say, okay, the dollar is going to lose its reserve currency status, and I'm not saying it happens tomorrow or anything. Let's just say this is going to happen maybe in 10 years, 20 years, 30 years, something like that. What metrics would you look for to see that we were gradually moving in that direction? One of the numbers I've looked at and I thought, okay, this would probably make a difference, is just global dollar denominated debt. And I thought, okay, well, if let's look at the petrodollar for a moment. If Saudi Arabia starts selling a lot more of its oil to Russia based in rubles, then that's less dollars that are required. If that happens more consistently throughout time, then there's less dollar denominated debt that these corporations would force to be taken on. And therefore, if there's less dollar denominated debt, that creates less demand for dollars in the future. And that's kind of what is kind of indicative of that process playing out. So should I be putting as much of an emphasis on dollar or global dollar denominated debt? Or what are your thoughts there?
I think that's a good idea. I mean, I speak a lot to central bank reserve managers during a year, and they basically have a couple of important prerequisites before they add a currency to their reserve basket. First of all, they need a liquid bond market to invest in. with the reserve currency. So I guess the dollar still, you could put a check mark in front of that for the dollar, certainly. But you can certainly also start putting a check mark in front of that slowly but surely for China. Secondly, it's very, very important for reserve managers whether the currency is used to settle trade. So exactly as you're saying, if commodity producers start selling the commodities in other currencies and actually settle them in other currencies, that would be a massive game changer. And it's exactly what China is trying to manufacture. They want more and more of global trade to move into Yuan settlements. But I don't think they can force that process unless they put tanks on the ground in large portions of the world. But they will try to force that process via the new e-Yuan that they intend to launch next year.
I was going to ask you that, the digital Yuan and the Belt and Road Initiative. Do you think that has something to do with it?
Exactly. If you look at it right now, compared to just 10, 15 years ago, China is essentially the biggest trade partner for a lot of countries worldwide compared to the US. And that was upside down just 15 years ago. So it essentially means that over time, the incentive to settle more and more of your trade in Yuan will grow, since China is your biggest trade partner. So I think, if we're talking about the next 20, 30 years, then China currently holds the upper hand in this debate.